Hey traders, it's John Howell here. I want to do just a quick little update with you on the S&P 500. I was actually doing a live coaching session for my private clients. If you're interested in becoming a private client, there should be a link in the description. You can apply for it, fill out the application. I'll call you personally to see if you're a good fit, if you're interested in becoming a private client of mine. But there's an interesting pattern. I was walking through them on our coaching call today, and I want to share that with you. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it with today's thing that I want to share with you. The interesting thing is, guys, is that today what I did was, the reason why I'm doing this video for you, I actually wasn't going to do a video today, but I've been looking at the market. You know what? I wanted this, guys, just to give you guys a warning, just to help my YouTube folks out. But what I did today is, for my coaching clients, what I did today is I went back to every major crash in history, right? And I went back to 1929, the 1960s, the actually, in fact, let me actually bring this up to here. Let me actually just share with you what I was actually doing for them. And so what I was doing is, this was some of the actual PowerPoints that I actually went through with some of my private clients. Again, I do this every single week with my private clients just to really help them stay on top of the markets. But I went through the 1929 crash, the 1962 crash, the 1966 crash, the 1987 crash, the 2008 crash, all these different crashes, right? The COVID crash and so on and so forth. And the interesting thing is, I was telling them that there's some major things that happened. Again, I'm not going to go into that because that was like over an hour-long training that I did for my private clients today. Again, if you're interested in joining and having me as a coach for over 12 months, there should be an application form you can fill out in below. But the purpose of me doing today's video for you is that what I want to share with you is, I want to share with you something that I was talking to them about on the market update aspects of my call, that there is something interesting happening right now that may cause us to really have a sharp pullback if we get certain things in the market. So that's the reason why I'm doing today's update for you. So if I just look at the S&P 500, remember, guys, the market is always talking to us, and I was telling my private clients today that it's our job just to continue to read the market and listen to the markets, okay? And I was telling them that just to keep an eye out a few things. And one of the things I was talking to them, was about this one thing I'm going to share with you right now, and that is this: in a downward trend, right? You can see in this market here, and let me bring up a different moving average here for a minute, because I want to share this with you. This is actually what's called a 52-day moving average, right? So you can see what I've got on here. Let me just take this off the screen here. I'll leave that on there. But as you can see, look at this 52-day moving average. This 52-day moving average, I love using the 52. The 52 has just been my thing. I don't know why, guys. It's just been my thing. It gives me a good gauge, right? So I use 52 as a sort of an overall trend analysis. But look what's happened ever since day one, ever since the start of this year, right? Year to date, what's been happening? Bounce, 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 all the way up. Okay, so there's two things I want to share with you right now on this here, right? Two things right here. We have a bounce, came down, came straight up, bouncing here, bouncing, bounce, bounce. But look what's happening now. This whole year, we've been bouncing off the 52-day. Now, this is just a simple moving average. But it's like, John, why'd you use 52? It doesn't matter. You could use a 60 if you want to, okay? I've just always used 52. I like using 52. Plus, I also like using 20 as well, too, for some short-term trading that I do. But look at the 52-day moving average and keeping in not only with the 52, but look at it bouncing. But not only that, but look at this here. Low, equal low, higher low, higher low, higher low, higher low, higher low. So higher lows above the 52, bouncing off the 52, buyers in control. We are getting a major shift right now in the markets, and a major warning sign needs to be here right now when it comes to these markets here, right? What do we have? We have a bounce. Look what happened here, right? Remember, higher lows, if we have the 52, like just say that's the 52, and then higher lows above the 52, lower highs below the 52 equals sellers in control. Buyers in control, sellers in control. With me? Look what's happening here. We rally down, bam, Came back up. What do we have here? Lower high. Came back down. Bam. Came back up. Look what we could be forming right now. What is it? It's actually one. It's actually, these two is now rejecting it. Bam. One. Bam. Two. Right. So 2 levels we're actually rejecting the markets right now. Now, this is where it's a warning sign, guys, that we need to really keep an eye out for what's happening here over the next few days. Because if the S&P starts to do something like this, guys, we do something like this on the downside coming through, and then we start to get a nice strong break below that there is a like get out of Dodge, because we're probably likely to see quite a sharp move down. I reckon down to say around. Let me just look at some of the sort of the 4,000 level. Looks like we could get a move down to there, maybe even more, right? But this is just a warning sign, guys. That if we start to get something like this, where it's a breaking below 4,300, there's a massive probability. Now, I'm not telling you don't go short the market dose on this. I'm just telling you that there's a warning sign that this is giving us a warning sign that we could see a bit of a waterworks, a bit of a free fall, just like we did with Bitcoin, right? Bitcoin did the exact same thing. And that's what I wanted to share with you today. So this is just the warning sign. This is a warning sign. There's a major shift that is taking place right now. And if I zoom in on a bit more over the last, say, 6 months worth of data, you can see what I'm looking at here. Look at the 52, above the 52. But now we're starting to shift. We're starting to take a different shift in the markets. And it's not looking too good right now. But we need to keep an eye on this. I'm not saying it's definitely going to break below 4,300. I don't know that. What I do know is that if I do get my confirmation, which is a close below 4,300, then we could see a 10 or even a 15% drop on the downside. Like, if you can see, if I use actually a Fibonacci tool from the low to the high, we could even see a 38% retracement, which is down through here, which is like what's that there? That's actually a 20% drop. I don't think we're going to get that. Well, there you go. I don't think that anything can happen, right? In fact, if you go and have a look at the Bitcoin market, let's go look at Bitcoin. You can see what actually happened with Bitcoin here. Bitcoin from the major low point. Let's have a look at this here. Actually, let's just bring up the weekly chart here for a minute. So from the major low point, you can see Bitcoin did the exact same thing, right? From the major low point to the major high point, look what happened. It actually retraced down to the 62%. Let's actually go down to this point here. So it actually retraced down to the major low to major high. It actually retraced down to the 50% level. That level right there around the 35,000 is that 50 to 60% level. And then now we're getting the, man, look at that bounce in Bitcoin, eh? Look at it go. Beautiful. For you guys that are part of my private coaching program, you know exactly what this formation is, right here. But the purpose of me saying this, guys, once again, is that this could be this is the warning sign, guys, okay? This is the warning sign. We could be getting a mock charge to the downside. So we just really need to be ready for this on the S&P 500. So, okay, guys. So, guys, please, once again, the reason why I'm doing this here, again, I wasn't going to do a video today, but I did a really good detailed session on the crashes and the big pullbacks in markets and so on and so forth. And on the market update part with my private clients, I was talking about this here, and I really just wanted to share that with you to help you guys out with there. So I hope this helps you out today, guys. Once again, guys, if you'd like to join my private coaching program, over 12 months worth of private coaching with me, get access to my strategy, my daily coaching, and all that sort of stuff, there should be a link in the description. Or if you just like to get started, there should be a link in the description for a sale that I'm running for $7 in the link in the description there. So you can go get the $7 trading course, or if you really want some more hands holding, where you got me there every day helping you and coaching you every single day, more hands on, then you can apply for it. There should be a link in the description. Go get that right now, guys. Please keep this in mind, that if you are long right now, guys, and you're looking at the markets and you are long as we speak, that if we do start to get this closing below this 4,300 level, guys, then there's a massive probability we're likely to see at least a really strong waterwork movement on the downside. So this is a bit of a warning. Be prepared.